A company was incorporated on 1st May 1984 to take over the business as going concern from 1st January of the same year. The turnover for the year ended 31st December was rupees 2 lakhs, namely rupees 60,000 for the first period up to 1st May, and rupees 1,40,000 for the following period. From the profit and loss account given below for the year ended 31st December 1984, you are required to ascertain the profit prior to incorporation. Okay. Now, profit and loss account for the year ended 31st 12/84, gross profit is given 70,000. In credit side, gross profit is given. On what basis the gross profit should be distributed? Profit pre and post incorporation. On what basis the gross profit should be distributed? Any response? Lalit, am I audible? Lalit? 575. 575. 541 in front. Am I audible? Yes. Okay. Now, like gross profit, that means like if a sales increase, gross profit will be increased. If a sales decrease, gross profit will be decreased. So gross profit will be distributed according to sales ratio. Rent and rates. Rent and rates. On what basis the rent and rates should be distributed? On what basis rent and rate should be distributed? 510. Solomon, can you respond? 510, Solomon.
Sir?
On what basis rental rate should be distributed? Yes.
Sir, can you hear me, sir?
Yeah, I am able to. Tell me on what basis the rental rate should be distributed. Me first. Vishwanath, 531. 531. 531.
Sir,
Yes, on what basis rental rate should be distributed?
sir,
On what basis rent and rate should be distributed?
sir, on the base of space occupied.
Space occupied. Okay, very good. See, as you discussed last class,
Thank you.
as you discussed last class, there are two ways where the expenses will be distributed. Generally, it's going to be a sales ratio. Another one is going to be a time ratio. If any expenses related to sales, it will be distributed according to the sales ratio. If any expenses related to time, that is fixed period of time, it will be distributed according to time ratio. But certain cases, they will give some exceptional information. Based on the information, we need to process. Okay, for example, here, rent and rates. Rent will be paid on monthly basis. It's understood every month the rent has to be paid. It's based on the time. So it's going to be a time ratio. Second one, insurance. Insurance also time basis. If insurance maybe go for 3 months, 6 months, or 1 year. Okay, every month is going to be remain same. If I paid like insurance premium for 12,000 per annum, it's understood every month I am incurring 4,000 rupees. Lighting also is based on the time. Salaries is a time ratio because salary will be paid every month, monthly basis. Director fees, it is not it is not goes with the time ratio. It is not goes with other thing, because director will be appointed only post incorporation. That is, only after registration of the company, the director will be appointed. So no way related to pre-incorporation. So the 2,000 rupees of director fees goes with post incorporation. It's not a pre-incorporation at all. So it should not be distributed. It will be mentioned the full amount in the post incorporation period. Then sales discount. Sales discount. Any expense related sales it should be distributed according to sales ratio. Okay, pre and post incorporation sales ratio. Sales commission, again sales ratio. General expenses, because general expenses based on time ratio. Carriage outwards, which means a goods delivery cost. Carriage outwards basically say delivery transportations of delivery expenses. So it is related to sales. When the sales increase, the carriage is going to be high. When the sales decrease, then the sales carriage expenses will be less. So carriage outwards is going to be sales ratio. Bank charges, time ratio. Repairs, time ratio. Bad debts, as we discussed yesterday, bad debts is considered as a sales ratio, because when the sales increase, possibility of bad debts is high. When the sales decrease, possibility of bad debts is going to be less. Interest on loan interest is going to be a time ratio. Then net profit is given. Now there is no additional information. Since there is no additional information, we can directly go to the sum. So in this sum, gross profit is given, net profit is given. We are not going to find out any information. Do you understand? Gross profit is given, net profit is given. We are going to find out the net profit. But net profit, we need to identify how much pre-incorporation profit, how much post-incorporation profit. That is alone we are going to find out. So 30,200 net profit is going to be split into two part. How much pre-incorporation, how much post-incorporation. How much profit for pre-incorporation, how much profit for post-incorporation. That need to be identified. That is the only thing we are going to find out. Do you understand? So we are not going to find out any new information. We are going to find out the splitted information which is available in the profit and loss account. Do you have any doubt with the questions? You can ask me now. Do you have any doubt with the questions? You can ask me now. Yes. Do you have any doubt? $535. Kirti.
Sir,
Yes. Do you have any doubt with the question?
no, sir. No, just now I came, sir.
Okay. Now let's go for the answer. Lokesh, do you have any doubt? For you? I hope it's loading.
Yes,
Okay.
sir.
Yes, sir.
Okay. So for time ratio, these 3 dates is very important. Okay. Sometimes the question is given date of incorporation, date of commencement of business. We don't want information related to commencement of business. We need information only date of incorporation. Even the business commencement is later, on the date of incorporation, there is existence of the company. We can include any expenses, income. Okay. So we need only 3 information: beginning of the year, date of incorporations, and end of the year. Okay. Here, when you go through it, beginning of the year, it is given. The question is given. A company was incorporated 1st May. 1st May. So incorporation date is given 1/5/1984. 1/5/1984. Okay. Then second one, to take over the business as a going concern from 1st January 1st January. So it's going to be 1/1/1980, 1984. Okay. Last as usual, the date is given 31st December 84. 31st 12 84. These three informations is needed because pre-incorporation period, incorporation period is nothing but 1/1/84 to 1/5/84. How many months? We can take 4 months. We can take 4 months. Am I right? Here, post incorporation period. Post incorporation period is going to be 1/5/84 to 31st 12/84. This is going to be 8 months. So the ratio equal to 4:8. That is 1:2 is going to be time ratio. Are you clear? For calculating time ratio, we need three informations. One is beginning of the year, second one date of incorporation, third one end of the year. Beginning of the year till the date of incorporation, we consider a pre-incorporation period. Pre-incorporation period, that is 1/1/84 to 1/5/84 is considered as a pre-incorporation period. Okay, it goes with the 4 months. Then end of the year, a post-incorporation period is nothing but date of incorporation to end of the year. That is what post-incorporation. 1/5/84 to 31st 12/84 is considered as a post-incorporation. So 4 months is going to pre-incorporation, 8 months is going to post-incorporation. 4:8, that is 1:2 is going to be time ratio. Second one goes with the sales ratio. Sales ratio. What is the sales ratio? We need to find out. Okay. Pre-incorporation sales and post-incorporation sales. We need to find out pre-incorporation sales, post-incorporation sales. Both we require. Okay. It is given. Yes.
So can you zoom a little bit?
Which one? Excel sheet.
Yes, sir.
One second, it's loading. I hope now it's visible, right?
Yes, sir.
Okay. So sales ratio, pre-incorporation sales and post-incorporation sales. 2 sales is required. Okay. Just to go through it, the turnover for the year ended 31st December was 2 lakhs. Namely, rupees 60,000 for the first period up to 1st May and rupees 1,40,000 for following period. So up to 1st May, that is pre-incorporation period, sales is considered 60,000. Pre-incorporation sales is considered as 60,000. Post-incorporation sales is considered as 1,40,000. Total sales is given 2 lakhs. Okay, total sales is given 2 lakhs. Okay, so what is the ratio? 66:14 or 3:7. We simplified 3:7. Do you understand? So we are calculating sales ratio, we are calculating time ratio. Both ratios over. So for calculating time ratio, we need 3 dates. One is the beginning of the year, another one date of incorporation, another one end of the year. Beginning of the year till the date of incorporation consists a pre-incorporation period, that is 4 months. Incorporation date to end of the year is a post-incorporation period, that is 8 months. Sales, total sales is given 2 lakhs. Out of 2 lakhs, pre-incorporation period 60,000 is understood. Remaining 1,40,000 is going to be post-incorporation sales. So we got the ratios 4 is to that is 1 is to 2 for time ratio, 3 is to 7 for 3 is to 7 for 3 is to 7 for sales ratio. Now we can go for one by one. Okay, I'll go through it. Let's go for one by one. So this is a format we need to follow it. Since it's a company, company accounts following as per schedule format, the same format need to be followed. Okay, the general format statement showing profit, showing distribution of profit both pre and post incorporation, particulars, total amount, total expenses, on what basis the expenses will be distributed, either sales ratio, time ratio, adjusted sales ratio, adjusted time ratio, or allocation to post incorporation or allocation to pre incorporation. That need to be decided. How much pre incorporation period, how much post incorporation period, that decide. Okay, first one, income. Revenue from operation, then revenue from operation, that is basically is a gross profit. Okay, other income, if any income, we should be included, but in this sum there's no other income, only gross profit alone. Only gross profit alone is income. Okay, now expenses as usual. Expenses divided into 5 heads: cost of goods sold, employee benefit expenses, that is salaries, wages, wages, employee benefits, bonus, or any other benefits paid, it will become finance cost, interest on loan, interest on debentures, or any other expenses will be distributed. Depreciation, amortization, if any depreciation, preliminary expenses written off, if any information is given, it can be. Other expenses, rent, insurance, lighting, basically it's office expense, administrative expenses, selling, distribution expenses. Okay, these are things will be coming in the other expenses. Okay, so let's go for the first one, gross profit. So the gross profit in this sum is going to be 70,000. As I said, gross profit is based on the sales. When the sales increase, gross profit will be increased. Sales decrease, gross profit will be decreased. So gross profit is a total amount is going to be 70,000. On the basis of gross profit is a sales ratio. Sales ratio we already calculated 3 is to 7. Okay, so how much post pre-incorporation, post-incorporation? Pre-incorporation is going to be 21,000. Post-incorporation is going to be 49,000. No other income in this sum. We don't have any other income. Okay, only gross profit is available. So gross profit included, that is going to be total of A. Okay, do you have any cost of goods sold? We don't have any cost of goods sold. We can leave it as it is. Employee benefits. Employee benefits in this sum, only salary is available. Salary, as I said, salary will be based on time ratio. Based on the time only, the salary will be increase or decrease. Okay, so 7,800, time ratio 1 is to 2, 2,600 and 5,200. Okay, so finance cost, interest on loan is given. Interest on loan will be distributed according to time ratio. Loan will be distributed according to time ratio, that is 1 is to 2, 400 and 600. No depreciation, no preliminary expenses available. Okay, rent and rates, as I said, rent and rates is a time ratio. Insurance is a time ratio. The expenses, insurance, the total amount is going to be 720. 720 divided by 3, 240 is going to be pre-incorporation. 720 divided by 3 into 2, 480 is going to be post-incorporation. Then lighting will be a time ratio. So 2040 divided by 3, 680, and into 2, 1360 is going to post incorporation. Director is appointed only post incorporation period. These expenses nowhere related to pre incorporation, so it's allocated to post incorporation. Pre incorporation, no expenses. No director before the company incorporated. Okay, sales discount, any expenses related to sales, it will be distributed according to sales ratio. Sales discount here, sales discount is a sales ratio distributed according to pre and post incorporation 1500 and 3500. Sales commission is going to be 3700. General expenses is going to be time ratio it will be distributed 2400 and 800 1600. Carriage outwards, as I said, is a distribution expenses related to sales. Related to sales is going to be sales ratio 3000, so 900 and 2100. Bank charges will be paid based on that time. It is not loan. Don't be assumed as a loan. Interest on loan is a different, bank charges are different. If you are maintaining bank account, annual charges will be calculated and it will be debited from your bank account. Nowadays, even SMS charges also they make 17.5 rupees or 17.8 rupees. They are calculating for SMS charges also. So it is a 1 year service. So it will be distributed according to time ratio. So the 140 and 280. Repairs is going to be time ratio. It's going to be time ratio. Okay, that made. Bad debts, as I said, is a sales ratio. Sales ratio is a distributed. Now we calculate the total of B. Total of B. Okay. When you go through it, as A minus B, 70,000 total gross profit, net profit is given 30,200. That's what I said. We are not prepare any new information. 70,000 gross profit, 30,200 net profit, the same only we calculated. Okay, but it has to be distributed how much for free incorporation, how much for post incorporation. Okay, A minus B, 9,020 is a pre incorporation profit, 21,180 is going to post incorporation profit. So pre incorporation profit, how much, and post incorporation profit this much. If you have any doubt, you can ask me now. Do you have any doubt? You can ask me now. Yes. $547, Yokesh.
Yes, sir.
Okay, now your phone is working. Do you have any doubt?
No,
No doubt.
sir. Which is A, sir, in this total?
Which total revenue is going to be A.
Oh, okay.
Gross profit, total revenue, total income here is going to be 70,000. That is gross profit. Gross profit is going to be A. Total expenses will be B. A minus A, profit minus the expenses is going to be profit, net profit. Any other
Okay,
questions? Yeah. Can you post your attendance now?
ஹலோ சார்.
Yes.
சார் நான் அப்பா ஃபோன் பண்ணாங்க சார். அதான் லெஃப்ட் ஆகிட்டேன் சார் தெரியாம.
Okay, okay.
5:43 சார்.
Okay. So just to go through these questions because it's not a comprehensive, but it's very important for calculating different ratios and distribution of expenses. Okay. Mukesh and Co. Limited was registered on 1/1/1999 to buy a business of by Mrs. Ms. Mukesh Bros. As on 1/10/1988 and obtained the certificate of commencement of business 1/2/1999. The accounts of the companies for the period of 12 months ended 30th/9/1999. Disclose the net profit 1,25,000 after having charged the following. Okay, one second. Charge the following. Now, salary 30,000. There was 4 employees in the pre-incorporation period and 7 employees in the post-incorporation period. Wages 10,920. There was 4 workers in the pre-incorporation period and 5 workers in post-incorporation period. And the rate of wages were 160 and 200 per month per workers in the pre and post-incorporation period respectively. Sales 4,80,000, of which 80,000 related to pre-incorporation period. So 4 lakhs is going to post-incorporation period. Director's fees 16,000. Director fees is going to be 16,000. Okay, that's all. This is what the questions you are required to calculate profit prior to and post-incorporation period separately. Okay, that's what I said. The question is simple, but calculation is going to be very lengthy. Okay, I have some questions. Krumux 539. 539. I call it to.
Yes, sir.
Should you take data of commencement of business or data of incorporation? Which one we should take for calculating time ratio? Data of commencement of business or data of incorporation? Which one we need to take?
Incorporation, sir.
Incorporation. Is it correct? Is it correct? As usual, you are correct.
Thank you, sir.
Okay. So now let's present the Excel sheet. Profit is given. Net profit is given 1,25,000 after adjusting the following other expenses. So we need to find out gross profit or profit before adjustment. Profit before adjustment. So net profit after adjustment is given 1,25,000. It's given 1,25,000. Add salary wages, salary 30,000, wages 10,920. Then sales is given. Director fees 16,000. Director's fees 16,000. Okay, this information, so we can find out unadjustable profit. Sum of the total is going to be unadjusted profit. Now there is a need for time ratio. Time ratio in this question is very important one. Okay. Date of beginning. Okay. Date of incorporation. Year end. Year end. Okay, three information is needed. Year end is given 10/9/1999. 10 30th 9 30th 9 1999. Okay. Then Mukesh Limited registered 1199. 1199. Beginning of the year is understood 1/8/1998. Am I right?
Sir, how will the net profit 1,25,000, sir?
98. One second. The question: the accounts of the companies for the period of 12 months ended 30th 9/99 disclose a net profit rupees 1,25,000 after having charged the following amount. In the question is given 1,25,000 as a net profit after adjusting the following expenses.
Yes, sir. So the net profit should be just 1,25,000, right?
Yes, correct.
But we have
Yeah, tell me.
added the following: salary, wages, and director's fee.
Correct. See, salary, wages, and director fees subtracted from the net profit. Am I right? But what profit prior to incorporation? What distribution of profit profit prior to incorporation? What do we need to do? We to take a gross profit and subtract the salary, wages, and director fees separately from how much pre-incorporation, how much post-incorporation. Actually, in the questions, it is subtracted the company overall profit minus overall expenses. It is not subtracted how much pre-incorporation profit, how much post-incorporation profit. That is why we added and find out unadjustable profit. Basically, sometimes if there is no expenses, this 1,81,920 considered as a gross profit. Do you understand? So we are calculating unadjustable profit and going to find out net profit for pre-incorporation how much, post-incorporation how much. We are not going to find out any new information. We are going to find out splitted information. Do you understand?
Yes, sir. Yes, sir.
Okay. So pre-incorporation period is considered, what is the period? 1/8. Because why I taken this why I said this question is important. In the question, it is not followed both financial year as well as academic year, as a financial year as well as calendar year. They follow the year beginning is going to be 1/8/98, ended 31st/9/99. So it is given 12 months entered 30th 9/99. Is understood? It started 1/8/98. Do you understand? 1/8/98 to 1/1/99. How many months? It goes with 8, 9, 10, 11, 12. So 5 months. 5 months is considered pre-incorporation. The post-incorporation period. Post-incorporation period 1/1/99 to 30th 9/99. So how many months here? 9 months. Am I right? Is it correct?
Yes, sir.
So 8, 9, 10, 11, 12. So 5 months is going to be here. Here is going to be 9 months. Oh, it's supposed to be 12 months, right? Where we made a mistake. The 12 months, like 30th 9, 9, 9 is going to be 12 months. The business is started, okay. And obtain the certificate of incorporation of business, okay. 1 The Mukesh Limited was registered 1198. Yes, correct. Consents is going to be 110. Starting from 110. 110. So it's going to be 3 months. 3 months. This is going to be 9 months. 9 months. So the time ratio is going to be 3:9 or 1:3. 1:3. 1:3 is going to be time ratio. Okay. Now sales ratio, I hope no sales ratio will be easy. Sales ratio pre-incorporation sales. Pre-incorporation sales is considered how much pre-incorporation sales, and we need to find out post-incorporation sales. Pre-incorporation sales is given like we can see the rupees 4,80,000, of which 80,000 related to pre-incorporation. Total sales is given 4,80,000. 4,80,000. Here 80,000 related to pre-incorporation. So 4,80,000 minus 80,000. 4 lakh is going to be post-incorporation. So what is the ratio? 8:40. 8:40. Am I right? Am I correct? So 1:5 is going to be sales ratio. Is it right? Someone tell me yes or no. Then only I can identify whether you are present or not present.
Yes, sir.
Okay, thank you. At least Irfan is responding now and then. Good. So now let's go for first one, adjustable. Look at the sum. Salary 30,000, out of which there are 4 employees in the pre-incorporation period and 7 employees in the post-incorporation period. Okay, so salary adjusted time ratio for salary. Okay, pre-incorporation and post-incorporation. Pre-incorporation, post-incorporation. Pre-incorporation, it is given 3 months. Pre-incorporation period is going to 3 months. How many employees? 4 employees. 4 employees. Post-incorporation, 7 employees. 9 months. 9 months. 7 employees. Okay. So the ratio is going to be 3 into 4, 9 into 7. Okay. 9 into 7. So what is the ratio? Can we simplify it? Can we simplify it? I hope we can simplify with the 3. This time ratio is going to be, can we simplify it?
Yes, sir. 4:21.
3 and 4:21. We can simplify it. 4:21 is going to be adjustable time ratio. Then wages, there are two conditions. One is the amount will be changed. We cannot mention ratio. Actual. The reasons, take the same two values. Okay. Pre-incorporation, 4 workers. Post-incorporation, 5 workers. Okay. Pre-incorporation, 4 workers is correct. Post-incorporation, 5 workers. 5. Rate of wages, pre-incorporation 160 is 160. Post-incorporation wages rupees 200. It's 200. So we cannot find out the ratio. If your number of employees and number of months is given, we can calculate. Here number of employees is different, month is different, amount also is different. So what you need to do, that's why I mentioned wages actual. So 3 employees into 4 months into 160 per employees. Okay. Here 9 months into 5 employees into 200 per employees. So if you calculate the total, it's supposed to be tally with the book answer 10,920. The book answer also, book total wages also 10,920. That's all. Okay. These 3 workings need to be done. Once this working is over, then we can go for simple examples. 1 second. We can go for a simple calculations because the answer is very simple. Okay. So this I think can be deleted. Gross profit also can be deleted. And expenses. Deleted. Okay. Now let's go for one by one. Gross profit we already calculated. How much the gross profit? That is unadjustable profit. Unadjustable 1,81,920. 1,81,920. Okay. Gross profit 1,81,920. Okay. Then sales ratio. What is the sales ratio? Time ratio. Sales ratio 1:5. So sales ratio here 1:5. We can go for 1:5. So this amount 1:5 divided by 6. Into 5. Okay, this is what with regard to gross profit. Then we don't have a cost of goods sold. We don't have employee benefit. We have wages. Wages total amount 10,920. 10,920. Employee benefit expenses 10,920. So from employee benefit expenses, we can mention actual. Actual value 1920. Then here 9,000. Then what is other expenses we have? Wages, salary also employee benefit. Okay. Wages. Suppose here salaries. Salary total amount 30,000. Salary total amount 30,000. weighted time ratio. Weighted time ratio. What is the ratio? 4:21. 4:21. Okay, so 30,000 divided by 25 into 4. Okay, 30,000 divided by 25 into 21. 21. Okay, now next one, director fees. Director fees is of allocations. Director fees is going to be 16,000. 16,000. Post corporation 16,000. Here it's going to be nil. That's all. I hope you got the answer. 1,25,000 is the net profit. Okay. Green corporation is going to 23,600. Post and corporation is going to be 1,01,400. That's all. Do you have any doubt? You can ask me now.